All right. Good afternoon, everyone. My name is Mo Islam, and I'm the co-founder of Payload. Hopefully, since you're joining this webinar, you already know who we are. But for the uninitiated, we are a digital media company covering the business and policy of the aerospace industry. And you can sign up for our daily newsletter at www.payloadspace.com. Before we get started today, I do want to pass the mic on to our sponsor, Bank of America and Hovig Margossian, a senior vice president with the firm's aerospace, defense, and space tech practice. Hovig, over to you.
Thanks, Mo. It's great to be with everyone today sponsoring this awesome event from an awesome space media company, our favorite. Like Mo said, my name is Hovig Margossian. I'm with Bank of America's Aerospace, Defense, and Space Technology practice. Bank of America is celebrating 80 years in serving the aerospace industry this year. We are a global leader in providing banking, investment banking, and equity research to the space industry. If you'd like to connect with us and learn more about our industry focus and just meet the team, Mo will provide our contact information in the chat box below. I'm looking forward to the discussion today. Thanks, Mo.
Yep, thanks, Hovig. Really appreciate it. So today we are here with a pretty amazing group of panelists across venture capital to talk about the market, how it'll impact the economy, how startups can navigate the current fundraising landscape, and also just broader trends for the industry at large. So to kick things off with introductions, I'm going to start with Michelle. So Michelle Voles. She is a partner on the American Dynamism team at Andreessen Horowitz, where she focuses on defense, aerospace, energy, and hard tech. Michelle started her career at Palantir working on the government product. She also worked at a number of other VC-backed startups in product and business development roles. What's not in her bio is that she is an avid runner and probably faster than most of us on this call. She's also the only person that I know that's run a marathon on Antarctica. That's like for real. And has also run an ultra marathon. And she has actually inspired me to take on running. But I'm more at the 5K, not 50K level, which she kind of casually runs, or so I hear. Shaheen Farshi is a general partner at Lux Capital. He's worked on several software startups, has conducted PhD research designing chips, systems, and...
Did we lose Mo?
I think we might have lost Mo. Shaheen, you want to finish your intro?
He was doing a better job giving my intro than I would be doing my intro.
Make sure to include your athletic feats. I'm still trying to rack my brain how I'm gonna try and compete with Michelle's accomplishments.
Yeah,
here.
I'm embarrassed here. Yeah.
Can we get a little bit of color as we're waiting for Mo to sign back on? How did you end up running a marathon in Antarctica?
Yeah, I'm trying to run one on each continent and had to knock that one off. I'm running the Tokyo Marathon in March, and then I have 2 left after that. So
amazing.
My 2023 goal is to finish the challenge. So hopefully I don't get injured.
That's incredible. And how long was the ultra marathon that you ran?
100 kilometers. So
Wow.
it's like 62 miles. And it was in Zion National Park in Utah. So lots of ups and downs.
Yeah,
It's very
incredible.
It's my stress relief in between all my Zoom calls.
You got some questions in the chat here, Michelle. Marathon time in Antarctica versus US. How much harder?
Wait, how are you seeing chat messages?
Q&A.
Oh, cool. It was harder. I don't really want to derail this from our space discussion, but it was harder. I ran, I think, like a 3:40 marathon. It was kind of like snowy and icy. I ended up winning that race, which was cool, but I would say the competition pool was fairly geriatric. As you might imagine, people that try to run marathons on all 7 continents have a lot of money and time. Anyway, Mo, back to you. Let's talk about me
So
more.
that was incredibly embarrassing. I just got kicked off of Zoom, so I'm really sorry. But last but not least, I was just about to introduce Anton. Anton Brevde is a partner.
Shaheen.
I'm sorry?
I think you got most of it.
When
We're
you
good.
dropped off.
I think I covered Shaheen, but anyway, Anton is a partner at Prime Movers Lab. He leads investments in scientific startups. His primary focus area are space and manufacturing related technologies. He also sits on the boards of eSpace, Quantum Space, Space Perspective, Alpha Insights, and Nilembo. So putting that little technological hiccup behind us, we have a lot to go over today and have gotten quite a bit of inbound Q&A already. And I will have to ask the audience for forgiveness in advance because I'm going to be jumping around a little bit today. So in the interest of time, I do want to just get started. So 2022 was a pretty interesting year for both macro and financial markets. We saw the largest monetary and fiscal experiment in history end. We're seeing signs and data around sort of growth slowdowns across both the US and Europe. The war in Eastern Europe has dramatically accelerated the shift of this kind of unipolar to multipolar world. And as this year begins, if you look at just public valuations, a lot are back to kind of pre-COVID levels, but arguably much of the private equity space has yet to reprice. So to kick things off, maybe what would be really great, a couple minutes from each of you, your firm's view on markets this year, and I'll let you answer with either public or private or both. Effectively, how are you kind of thinking about the world ahead? Let's not talk macro. Let's not talk space. We'll get into that in a little bit, but let's just talk macro for the time being. So Anton, maybe I'll start with you.
Sure. Yeah. I mean, I'm not a macro market expert, but I'd say our view as a firm as it relates to how we're advising our portfolio companies is to assume that the end of this year is not going to look radically different. We do not think it will be a better fundraising environment. And so, we've been advising our companies since the beginning of last year to basically do everything in your power to extend runway through 22, obviously, through 23, and as far as you can into 24, which is not always easy to do for an earlier stage startup. But I think, without going into space specifically, I think, everything we invest in is inherently more capital intensive than a software company. Not everything requires like hundreds of millions of dollars, like some people think when they look at a deep tech portfolio. But there's just a lot less money floating around in the ecosystem right now. And so there's a flight to quality. And I think we'll talk about later kind of what's required to raise money, but it's a much higher bar these days.
Very similar to Anton. The advice we give our companies is to husband their cash, is to be very mindful of what metrics ultimately drive and underpin their business, and to really spend money on impacting those metrics as opposed to investing in what will be the very long term. So focusing on the metrics that will impact the company and de-risk the company in the near term to put them in a better position to raise money in what's expected to be a more challenging fundraising environment. And to Anton's point, like, things aren't getting better anytime soon. But we are very long-term focused. We don't take kind of near-term, macro headwinds into consideration when making these long-term bets. But it does kind of impact how companies should be thinking about next financings, how it impacts their spend in the near term.
Got it. Michelle, do you think there's a chance that we enter into a recession this year?
That is a big prediction that I don't know if I'm completely qualified to answer, but I do think for startups in particular, like, there will be some hard rounds this year, especially I think even in the next 2 quarters. I think we might see down rounds, we might see consolidation. I think it'll be an interesting time to look at like M&A or private equity deals. I think that's could be opportunistic for a lot of people. I think there are a lot of talented people and interesting technology that just might not have enough runway. So that could have a lot of opportunities for the right buyer. But I also think that for the early stage, it's not a bad time to start a company. I think there will always be opportunities in recessions if that happens for good companies to come out of it.
Yeah. So actually, to an earlier point, Michelle, that you made, I do have. Oh my God! Sorry, guys. I'm having like total Zoom meltdown here. I apologize. Can everyone hear me?
You're rushing it, man. You can't rush Zoom. Yeah, you can't rush Zoom.
Yeah, Zoom, you just like, I almost don't want to touch my computer. So what I was going to say is I do have a quick kind of pop quiz for you guys. If you looked at 2022 and you looked at all of the funding rounds that have occurred on the later stage side, what percentage of those later stage funding rounds do you think were down rounds, if you were to take a guess? 2022.
I'll answer the question differently. I'll say that every single round valuation was completely revisited, and it was either a flat, like the majority of the rounds were either flat, down, or structured, where it was an up round, but there was some kind of preference on top.
Yeah. So so I've asked this question to folks before in the past, and generally the answer I get is something in like the 20-30% range, right? And I think to your point, the number is actually far lower. It's 11%, and which is surprising, especially when you consider like the 2021 number was something like 7 or 8%. So not much higher in 2022, and a lot of that was driven because to your point, Shaheen, driven by this. If you could go back to your insiders and do some type of bridge or convertible note financing where you actually didn't have to price your round, you did that, right? It was in your best interest. Is this sort of the year where we're going to see more pain on the later stage side? I think that's probably a general consensus amongst all three of you guys.
Yeah, I mean, one thing I'll add quickly is I wrote a blog post at some point last year where, seeing, based on what I've seen in the market at that point, which was continued, is so many companies were so well funded at the tail end of the boom period that many companies didn't need to raise money last year. So the very proactive founders, maybe founders that have been through down cycles before, were proactive about doing a structured round or a bridge round or a flat round. But a lot of the founders who tipped their toe in the fundraising market didn't like what they felt, decided to go and try and hit milestones and maintain, get an up round in 23. And I think what I see kind of in our portfolio and the companies I speak to is there's a tremendous amount of companies that will have 6 months or less of runway in 23. And then you need to find a market clearing price. So I bet that 11% is considerably, is a multiple this year.
Right. And by the way, I am seeing some activity in the Q&A. All the attendees, obviously feel free to drop in your questions. And as they come in, we'll make sure to get as much as we can answered. So just pivoting to space for a bit, if you actually look at just the public markets, right, nearly all 12 of the space companies that have gone public via SPAC are down at least about 50%. Some are down more than 90%. And that actually hasn't stopped sponsors or companies, right? Intuitive Machines that builds lunar landers, and then Worldview, that's more on the space tourism side, recently announced their own sort of go public SPAC transactions in the last few months. What do you think the long-term effect on space companies from the sort of SPAC market debacle? What is that going to look like? And really the way I'm thinking about this question is, a number of those space companies that went public are VC backed. And has this changed liquidity expectations for investors in this industry? Anton, I'm going to just start with you because I know you've written about this topic in quite a bit.
Yeah, just the high level thoughts. I think the interesting context is if you go before the space SPAC boom, there was a real dearth of liquidity. There was basically Skybox for $500 million by Google, and Virgin Galactic, which SPAC'd. And then, like, if you've gotten secondaries out of SpaceX, there was very little liquidity for 19 years effectively, which made it pretty difficult for VCs to justify investing in space. It just, you need liquidity to then reinvest into the sector. And so for a short time period, the SPACs kind of spun up this crazy flywheel because people were chasing the liquidity. But now I think the big harm that's been done, besides the retail investors that lost money, is the crossover investors and growth investors that got burned. It's going to take a long time for them to come back. And so there's and I think I saw a Twitter thread from Shaheen, so I'm not going to step on his toes. Like, who is going to fund the later stage rounds of the like 100+ early stage new space companies? That's like kind of the big question. I don't see those investors. I think they've been scared away, unfortunately, for the time being.
Anton, you're stealing my thunder. I was going to bring up that tweet. So let's actually hit that one on the head, Shaheen. To kind of end to Anton's point, you recently tweeted, I think literally 2 days ago, you wrote that for a decade, investors poured money into hard tech projects in space, robotics, energy that required tens or hundreds of millions of dollars before showing product market fit. Let alone, you wrote, attractive unit economics and a leadership position in their markets. Now you're predicting that over this next year, a lot of investors are going to step out of hard tech. Maybe talk a little bit about what you mean by that, and to the extent that you can tie anything related to space would be interesting to hear.
Yeah, I think that was a general comment relating to companies that had to raise, tens, hundreds of millions of dollars to be able to offer a product, let alone be able to show that they have a attractive, high margin, high growth business. So I feel like investors will always be excited about companies that will have a large impact, and as a result will require significant amounts of capital. However, there will be more emphasis on understanding the timelines that will be required to generate some kind of metrics that could be the basis of a later stage investor underwriting the business. Anton said it earlier, there were a lot of options available to scale up companies that were pre-product market fit. You had the crossover investors, you had the public markets, retail investors come in and underwrite these companies. A lot of that money is not assumed to exist moving forward. So you're going to have the more disciplined growth investors that really kind of sharpened their pencils. And at the earlier stage, one needs to be mindful that this is where the money is going to come from down the road, and we have to be prepared to answer their questions. So if we're spending money on, building factories and buying machines and doing all these things, we have to make a very, very clear case as to what our unit economics are, what our unit economics will look like before being able to raise a larger financing, which again probably wasn't the case in 2019 to 2021, where you could raise a big round on narrative alone.
Right.
Yeah, something I'll just add to that. I think the companies that can demonstrate real revenue or clear pathways to revenue iteratively across, like as they build out and scale and build their manufacturing, are the ones that will have a much better chance of getting financing. I think the companies that, to Shaheen's point, like have very long timelines and it like has a huge payout down the road and doesn't really matter what happens in between. I think the time for that is like less right now. I don't think we'll do as many, or I don't think investments will go as strongly to those types of companies. But the companies that come in and say like, hey, we have these contracts, hey, we have like this plan to start selling these services in the meantime as we build, I think we'll have a much stronger argument.
Got it. I have one last question on markets, and then we can move on and shift gears here a little bit. And by the way, for all the Q&A that's coming in, I will make a very concerted effort to tie in all these. So some really good questions that have come in so far. Of the current companies that are public, new space kind of SPAC companies, there's about 12 by my count, and 14 if you include Intuitive now and Worldview. How many of those are going to remain public companies by the end of the year? And you don't have to give me an exact number. I'm more kind of curious. Are you expecting consolidation? Clearly, we saw like back half of last year, really in December, Advent International, a private equity firm, buy out Maxar for a pretty great price for which was great for Maxar shareholders. And then L3 Harris acquiring Aerojet Rocketdyne, right? So a financial buyer and a strategic buyer. Now, there's a lot of SPACs out there that are very clearly running out of cash, probably sitting on 3 to 6 months. Some that are actively looking for buyers. Do we see significant consolidation or bankruptcies within that kind of universe by the end of this year?
I mean, I think I said this in the beginning. I think that this year will be a year where we see more consolidation, more M&A. I think it's just like, as we've already discussed, like the timing of runway, the loss of liquidity. I think that it's very probable.
Yeah. So I do want to shift gears to something a little bit more positive, right? Which was 2022 was actually a great year, huge year for the space economy. If you actually look at what was accomplished, just to name a few things here, right? We launched JWST, which is the James Webb Space Telescope. We saw the first all-private mission to the International Space Station. We launched Artemis 1, which is marking our return to the moon. We also saw, I think that number was 180 successful launches to orbit, which was the most ever. And that was 44 more than we saw in 2021. And we're on track to break that record again this year. And most importantly, I think global government space spend hit $103 billion in 2022. That number the year before was 92 billion. That was a record at the time. And we broke that record again for 2022. And we're probably going to break that record again for 2023. And there's a lot of reason to believe that that'll be the case. So I am curious, like, how do you categorize the space industry from an investment perspective? Do you think about, or how do your firms kind of think about space as a long-term investment opportunity? And Michelle, I would love to start with you, mainly because Andreessen has recently started increasing its footprint in space. There's been a lot of marketing color and just dialogue that, I think that's been very clear. And not to mention the SpaceX investment, which we can talk about later. But really thinking, how are you guys thinking about the category?
Yeah, I mean, yeah, we definitely are interested in the category and have been spending more time meeting companies in the space and doing research in the space to develop a strong thesis. Obviously, our SpaceX investment was announced. We've also made an investment in an early stage company called Apex that manufactures satellite buses. So it's definitely an area that we want to get really smart on and pay attention to. I would say we haven't, formalized any sort of specific thesis around it, but definitely have made it something we're going to invest in or invest time in.
Anton, you have a market map that I reference quite a bit and how you separate the industry. Maybe talk for a second about that and maybe where your focus is going to be for this year.
Cool. And I don't want it to be too much of a letdown because it's pretty simple, but I find it effective for myself at least, because there are a lot of categories and segments within kind of quote unquote new space. And the way I just bucket it is, are you selling to someone on Earth or are you selling to another space company? And the space for Earth segment, which has, Earth observation, satellite communications, I'd also consider the folks that are selling primarily to defense kind of in the space for Earth bucket. That is the big established markets. If you believe kind of the report, space today is $400 billion. Most of that is being sold in that space for Earth, either to defense or for satellite communications is kind of like the big market today. You don't need to speculate on the business model there, but you need to have something unique because there's obviously like a couple dozen optical Earth observation startups. So if you want to be the N+1 optical EO company, like what are you doing differently? So that's kind of one set of dynamics. Whereas space for space, which is to me kind of the second order effect of cheap launch, which is there's just going to be a lot more in orbit. Obviously, I think all of us on this call kind of are aware of that. I wouldn't be surprised if there's, if we have 4,000 active satellites, if we have 100,000 active satellites by the end of the decade. And so for me, space for space is kind of the trickiest one to underwrite because it's betting on the services that enable all of those constellations, whether it's moving them around, orbital transfer vehicles, orbital refueling, deorbiting. There's a lot to kind of service all of those satellites. But to time that, you need to time kind of when do those numbers start to really tick up? And I think in general, much of the industry got ahead of its skis, meaning they are examples of startups selling to startups, in some cases selling to startups, where it's too early. Like that space for space segment has not matured to the point where I think it can sustain very many public companies. And then the last bucket is kind of like a catch-all for Beyond Earth, where we put things that are, lunar, cislunar. Shout out to Steve Jurczyk. I see him as an attendee here. Most recent investment in a company called Quantum Space doing cislunar infrastructure. So that's kind of how we slice and dice it.
So Shaheen, I do have to say that you are the one, I think you're the person on this panel that has made the earliest space investment. And I believe that was Planet in 2013, and definitely correct me, either of you guys, if I'm wrong about that. And I know you've made a number of other investments, pretty early on in sort of the life cycle of new space companies. How does Lux think about the long-term opportunity in space?
So we're very excited about space in general. We feel like space is maturing from a category. For example, back probably 15, 20 years ago, mobile was a category, but now there's all kinds of categories in the mobile subset that is defined by the markets that they're selling into. So I think we'll see the same with space. I feel like, what would be called a satellite company today will be a media company or an enterprise company or an infrastructure company tomorrow. And so I'm very excited about the companies that are going to emerge. Michelle alluded to one of them, Apex, which is basically offering a service to companies that are building spacecraft. And so I feel like there's going to be an expectation, or I expect there to be many companies that are offering many different types of services that would put them into the category of, companies serving different interesting markets. So for example, we're invested in Epsilon 3. It is a quote unquote space company, but it's never going to launch anything, let alone build a single piece of hardware. But it is enabling all of these companies that are, in fact, doing space missions. And so I think it's a really interesting time. And, founders should be thinking more about the markets, to Anton's point, where they will have an edge selling into and how they will have a monopolistic position, how they plan to generate giant unit economics, and categorize themselves in that way versus calling themselves another space company, because that's not the way you differentiate yourself, in my opinion, moving forward.
That's a great point. Question from the audience here. How does renewed government and domestic commercial interest in reshoring manufacturing capabilities affect your your kind of outlook on the industry? Michelle, I'm gonna point that one at you, since you're our leading government expert.
Do you mean on the space industry in particular, or?
Yeah. Well, I would say space industry in particular, but you can be a bit more general about it as well, if you want to talk defense.
Yeah, I think, and this could be just my bias from spending a lot of time in this area and working in the general American dynamism sphere, but I think there's not only renewed interest from the government side. I actually think there's a lot of renewed interest from talent and from people like wanting to build hard things. And so I think I've actually been very inspired by the founders I've spoken to, or the people wanting to work at these companies and have a passion in kind of onshoring and building the US. I do think that there's there's government money going into this. There's macroeconomic factors around the price of different materials. So I do think we're going to continue to see the trend of people bringing things onshore. And I hope it continues. I think it does foster a lot of really creative innovation for the country. And so we hope to see more of it. I think we will. I guess we'll see how the world evolves over the next few years and decades.
So quick follow-up question to that, and not directed at Michelle, but really anyone here. There's an increasing interest in understanding how venture investors think about dual-use technologies. And there's no question, right? There's no question that venture capital alone can't build the industrial base of this country, right? There has to be a much bigger kind of broader financing presence. How do you think about partnerships between your organizations with, for example, strategic venture arms like Northrop, Lockheed or Raytheon and more defense-focused organizations like the DoD's Defense Innovation Unit. And I know a few of you have worked with some of these organizations in the past, but how do you think about it when you're doing round construction, when you're investing in a company? Is this something that you look for? And if not, at what point is it important for those organizations to be involved?
I'm happy to take a first cut at it. I think from my perspective, and I'm relatively new to the DoD area, but by investing in a bunch of space companies, you get to know those folks quite a bit. And I think all of this is an exercise in reducing the capital needs of these businesses. Like, at least that's the lens I view it, unless you're a defense focused company. If you're a hypersonics company and your goal is to sell to the government, you're like in a bucket like Palantir, that's different. But if we're talking about dual use, where you have a commercial market you're pursuing, but there is some defense applications, and so you can get access to contracts and money to buy down that capital, the equity capital needed. That's how I view it. And I think right now, from what I've observed, basically the biggest achievable goal is a strat-fi, which is like, you get a phase 1 server, a phase 2, and then you can get this strat-fi where the government will give you, DoD will give you 30 million. You need to come with your own $30 million of equity, and lots of companies have raised those. That is achievable, and that's great. $30 million, like, that's nothing to scoff at. I have seen very few companies that can do something meaningfully more than that. And what I've observed is the skill set and the team required to do more than that is radically proprietary to that type of process. And I've yet to see someone who's like, doesn't come from that world, like figure out how to become a program of record. And I don't think that's like a new, very some brand new insight, but that's kind of like the danger of it, is it basically caps out from what I can see at 30 million.
Yeah, I completely agree with that. And I think like for some of the earlier stage government financing, like the SIVers, those are like fine to get if you want some additional non-dilutive capital, and that's great. And I think like generally more capital going into this space is a good thing, because these are very capital intensive businesses. And so as much as you can get like government money or money from strategics that are willing to put it in, like I think in this industry, maybe more so than some other industries, like a rising tide lifts all boats. Like we want more investment going in, more people who can bring big dollars to the table, so that these things can get funded over the long term.
Shaheen, you're crushing the Q&A. I appreciate the
just trying to make myself useful.
I'm just like, where are these questions going? I don't see them anymore. So just to tie in a question that I saw earlier that I think is worth kind of talking about live here. So to this point on capital intensity and kind of reducing that capital need, Anton, that you mentioned earlier, space startups tend to be, not always, right? Because you have companies like Epsilon 3 that are not capital intensive, right? But oftentimes they are capital intensive. So how do you think about, and then kind of when you tie that together, right? Capital intensity, long R&D cycles, venture funds typically have 10-year terms, right? But achieving liquidity and more broader frontier technology, usually it can take much longer, right? If you look at, SpaceX is arguably one of the most successful private companies ever, and it's been private for 20 years, right? And hopefully there will be some type of IPO event, at least with Starlink in the next few years. I know it's been in discussion for quite some time. But how should the government's role evolve in supporting aerospace and defense financing? That's kind of one question. And I think related is like, how do you guys think about exits? Like when you invest in a seed company, right? When do you think you're actually going to exit from that investment?
So that's several questions combined. Maybe I can just quickly follow on the last question, which was government funding. So I am all about government funding before the company takes outside capital, before the company takes venture capital. After the company takes venture capital, the question becomes, I think it was to Michelle's point, like, is this company selling to the U.S. government? Is that its core business? If the answer is yes, then it should absolutely engage with as many, government entities as possible, or even our allies, and find a way to penetrate those organizations and become the program of record. if there isn't an expectation or a plan to become a program of record where this becomes a recurring business and you're going after onesie, twosie programs, I feel like that is a complete waste of time. So although it is nice to have, you know, $1 million here, $1 million there that can offset some of the costs, I feel like that distraction, again, unless it is on the path to becoming a program of record, which implies, you know, tens to hundreds of times that amount of money down the line, I personally think it's a waste of time. And that's obviously a longer conversation. We can dive into that if there's time separately. To your question on liquidity, so to your point, like SpaceX has been a company that's been private for 20 years, and it has been an amazing investment for venture capitalists because there were opportunities for them to generate liquidity through secondaries. And so as VCs, we aren't fixated on an IPO or an M&A event. We are fixated on generating demand for the shares of this company. Because if there is demand for the shares, then there will be some form of liquidity for us. And the way you create demand for the shares is by de-risking the business. And so we want to feel comfortable that with every incremental infusion of capital, there will be meaningful de-risking events occur and meaningful inflections in the core metrics of the business, the revenue, the growth, the margins, all the things that matter to investors that may not care about space or energy, but care about good businesses. And if you can convince someone who is looking to invest in a good business, then you can find a way to generate liquidity and pay back your investors. If we can do that over the course of 7 to 10 years, then we feel totally comfortable.
Michelle, Anton, anything to add there?
I agree. I guess the one thing I'll add, like, to the degree that it's helpful to give some examples, like, you know, thinking about the recent investments we just did a space-based solar power company that's in stealth with lower carbon. Like, that company is going to be stretching the limits of the 10 plus, you know, most funds have 2 optional 1-year extensions. But yeah, like the payoff there is, we believe, big enough that there will be secondary opportunities if they're successful. What's like tricky is if it's going to take a long time, it's going to be capital intensive, and it's very unclear if it's going to be a big market. Like, there's lots of those examples too. So yeah, you need to have, like in this case, what made it compelling was there's this big payoff where it is successful. And then the other thing I'll say is they don't need more money for 3 years. So like, it's that kind of like combination that gets us to make a kind of a bold bet in this climate.
So we have about 20 minutes left. So I do want to shift gears to some predictions and maybe some trends for the year year ahead plus. This will be a big year, another big year for the industry. We have Starship that is supposed to launch in March, fingers crossed. We have Polaris Dawn, which is Jared Isaacson's going to go back and orbit Earth. There's going to be another private mission to the ISS. And China is likely going to complete its space station Tiangong by the first half of this year, just to name a few things. Now, that's a lot of great stuff. Most of it, you know, some of it science related, some of it commercial. Curious to hear from all three of you guys, a vertical or verticals, parts of the space industry that you think looking ahead into 23, 24 are overhyped, areas where you would avoid. If I came to you and I said, "Hey guys, check out this company," you wouldn't even look at it and say, "Hey, no, not my cup of tea."
Boy, I'm going to get myself in trouble here because there are several areas that I said were overhyped that I ended up making investments in. I said that LiDAR is overhyped, and I went on to make a LiDAR investment. I said driverless cars are overhyped. I went on to make a driverless car investment. So I may predict my future investments by saying which spaces are overhyped.
Well, let me throw one out. Let me throw one out there that might be not too controversial. Launch companies. Do we think launch is overhyped?
Yeah, it's on my list. I'll jump in. Yeah, like this is my PSA to like, this is my perspective at least. For some reason, it seems every week one of our family office LPs like emails me and asks that they should invest in a given launch company. I think it's totally overfunded. I don't think that's like a controversial take. With the one exception, I totally underestimated the sovereign importance to space. And like, I don't think we need more US launch companies, but there's a company in Germany called ISAR, and like ISAR will probably have a future because they'll win EU contracts. An Indian launch company will have a future. There will be launch companies in the Middle East. So I think that's the caveat. But in the US, I think we have more than we need at this point. Actually, not yet, but like in terms of what's been funded, once relativity gets going and neutron gets going.
Yeah, I would say like I would caution against labeling something as overhyped. I think, especially this is like my own personal perspective. Like, I think like the founders are always going to be way smarter than the investors. Like if they have found an area that maybe other people think is overhyped, but they have like a novel solution, like I would never want to turn somebody away because I've already written off an industry if there's something that I don't know. But I do think like there might be some areas that are particularly crowded that a firm might want to wait and making an investment until like a more clear winner emerges.
Well, in that case,
I went as far as really quickly. I went as far as writing a blog post in 2015 about how there are 35 plus small launch vehicle companies. And then I met Relativity and I did the Relativity seed round. So I think to Michelle's point, like we as venture capital, the reason why we are venture capitalists is because we're not as smart as the founders. And so, we expect the founders to come to us to make a case that for things that in many circumstances are anti our thesis. So for example, as a firm, like we had a thesis to not invest in companies building 3D printing machines back in 2010. And then we did the Series A for Desktop Metal, which became a leader in building 3D printers. So I've learned my lesson, and I have, views that are weakly held. And I invite entrepreneurs to come and challenge those views and build great companies, around disagreeing with me.
One thing, if I can just throw out like a thought, I think on this launch topic, I think kinetic launch is really interesting. And that would be how I could envision something truly novel happening. And I don't want to derail us with kind of wacky stuff, but that's an area that I'm particularly interested in.
So Anton kicked it off for us, but yeah, areas of the market where you don't think maybe there's enough attention.
An area that I have been taking a look at recently or seeing more companies in is like space domain awareness. And I think there's like awareness from space and then awareness from Earth in space. And I think there's definitely something there. I think there's interesting like defense applications. I think there's like interesting like insurance related applications to protect people's assets in space. And so, and I don't know if I could name a clear winner in that. So it's definitely an area I've been taking a deeper look in.
Shaheen, you've been on the edge for many years. I'm very curious to hear what your answer is.
I mean, I think that I think by definition, if we're calling it an area that is under, I don't know, that's overlooked, I think by nature it's an area that everyone's already looking at. So I get really excited when founders come to me with problems that I haven't even thought about, that hasn't even been on the radar. It's like when I met Laura Crabtree at Epsilon 3, I wasn't even thinking about software for mission ops. And then, when she told me about it, I said, holy smokes, this makes a lot of sense. And I got really excited about it. So, I like it when founders come to me with something I haven't even thought about. And if I've thought about it, that probably means it's already by definition overhyped if it's on a VC's radar.
So, go ahead, Anton.
Yeah, the ones that I would add to build on, maybe, I guess you were talking, Shane, the Peter Thiel like Venn diagram of, it's not quite what you were saying, but what came up for me was things that sound like a bad idea, but actually are a good idea. These are like the wackier things that are like, I think are addressing, again, I put kinetic launch in that bucket. I've seen a couple companies working on this concept of basically endless propulsion and very low LEO, where you're sucking in the, minute amounts of atmosphere that are at like 200, 250 kilometers and generating fuel from that. And you could operate, in theory in perpetuity, more or less, at these low altitudes where you have benefits from a resolution perspective for EO or better performance for satellite communications. And then the other kind of wacky thing that I think was interesting came out of our orbital debris kind of deep dive and landscape is, I think, like, it's really hard to imagine the robotic approach of like a satellite kind of propulsing to something, grabbing it or deorbiting it. That hard to imagine that solving the issue. There are studies that have been done by the primes and by like Aerospace Corp about using directed energy, like, you know, quote unquote, a laser you can basically like point it at the Earth, the side of the debris facing Earth, and it ablates and it deaccelerates. And like, that's actually a solution that would be like incredibly difficult to get permission to do, but could actually solve that problem. So that's like another, I just thought, interesting area I've seen.
Let's talk for a second about Starship, just because it's such a huge topic of conversation, and there are definitely folks on either side of that debate. Where do you guys fall in that? You know, I think there's what I hear most from folks is how it will dramatically change mass volume design constraints for the industry, for both commercial and government. Do you agree with that? Now let's assume. Actually, we don't need to assume anything. What do you think about that?
I think it will create extreme downward pressure on pricing for launch, and it can radically impact kind of the economics of these other businesses that are trying to get into the launch game. And I think, you know, the companies that are trying to do what you just described, you know, altering payload size and relying on the Starship cadence will, you know, look to other solutions to get to their desired orbits. And that's why we funded Impulse Space, which is doing the in-orbit maneuvering, which will be an opportunity when Starship kind of goes more mainstream.
Yeah, I would say I generally agree with that sentiment. I think there'll be a lot
did just make a big bet on this company.
Right. I think it'll unlock a lot of new opportunities, both in the things that get sent to space and then the like ancillary things around potentially like moving things around in space.
And Anton, before you answer,
yeah,
I'm going to tee this up for you. You wrote an article very relevant, which I loved. We've talked about this in the past. Why SpaceX is at risk of bankruptcy. Part 1. We haven't seen part 2 yet, but we've seen part 1. Maybe talk about that in the context of Starship.
Yeah, it's a bit of a clickbaity headline, but the thesis of that article was basically, I don't think the risk of how long it will take to get Starship operating is baked into the valuation. I haven't done diligence, and so meaning I haven't actually done diligence on the company. I'm basing this on what I've can see publicly disclosed about the company and talking to like our founders in the satellite communication space. I think my answer to kind of like the main benefactor to Starship is Starlink. From what I can tell, Starlink doesn't work without Starship. I don't see how you can, if there's a 5 to 7 year lifespan for Starlink and you want to have something like 10,000 of them, like Falcon 9s would just be replenishing. It doesn't make sense to me. Like, I think you need Starship. That's also probably not controversial. And I think the majority of the valuation is Starlink. I don't see how you get to something like 140 billion without the majority of it being Starlink. But I'd be curious if Michelle disagrees as someone that actually did diligence and invested in the company. And so, I think SpaceX needs Starship. But then I'll also add, we just did the space-based solar power company. They're totally DOA without Starship or something with Starship economics. Maybe Terran R could work, but probably needs Starship. I also think the space stations like Axiom will benefit hugely or VAST from a Starlink. Anyone that's trying to put up a lot of mass.
So one last question, and we'll see how many Q&A from the audience we can take. Any large existential threats or risks that you guys foresee that could happen that would really limit growth in this industry? Or do you fall under hey, Pandora's box has been open, there's nothing that can stop this at this point, right? Even if Elon were to go away tomorrow, right? or maybe there is something that you guys are thinking like, hey, this could be a pretty big threat to the growth of this industry.
I mean, I think
if capital gets very expensive, sorry, go ahead, Michelle.
no, you go first.
I was just going to say, I'll just make this quick. I think if capital gets extremely expensive, because a lot of these companies require a lot of money, if capital gets very expensive and people flock to safety, I think there's a couple of questions in the chat about, moving to safety and decide not to invest in risky endeavors altogether, then it would become very difficult for these companies to grow. And then there has to be, an alternate source of capital to continue these projects.
Yeah, I was actually going to say something similar, but maybe for a different reason. Like if there was some dramatic crisis, like no one really saw COVID coming and that ended up like being very expensive. Like maybe there's some existential thing that we can't even predict because we wouldn't expect it that would come in and make money more expensive or derail financing or just shift priorities. But I would say like in absence of that, like one, we can't predict that. I would say I don't see it getting derailed anytime soon.
Yeah, I would just add, I think, I think this year is going to be a setback. I don't see how a bunch of companies, unfortunately, don't go out of business this year. I think that's can be a very healthy thing in the long run, and the those teams will go to the best companies, and it will progress forward. But I don't think this is going to be a very pleasant year. But I think how important space is to countries and their governments and defense, that's not slowing down. So that spending is not going to go away. And I think satellite communications it's already a thing today, but it's going to continue to become an integral part of people's lives. I think SATCOM especially is going to really have a lot of inertia that will push things forward. And that's SATCOM, I think will have the 2023 kind of new space crown if launch is kind of what everyone cared about. Starlink and Astronis and eSpace and a bunch of other companies, I think, will be kind of the big movers this year.
So just in the interest of time, just one last question here, and then we can wrap things up. Just so would love any answer from each one of you guys. When do you think we'll land on the moon? And when do you think we'll land on Mars? Anton, you can go first.
While he's thinking, just to clarify, we means
United States. I'm making an assumption that we'll. I mean, if you want to say that we won't get there first, that's perfectly fine too.
We will land in July of 1969.
I should clarify
my prediction.
Next, when will we go back? Is what I'll say.
I'm going to be honest. This is not a question I spend time thinking about. It's not something I feel like I have a particularly educated viewpoint. At one point I was tracking Elon's predictions on Mars, and I don't think it's going to be 2030. So maybe I'll say 2029 lunar, 2040 Mars.
Yeah, I truly have no idea. So this is a made up prediction, but I would be more optimistic. I think 2027 moon.
I'm going to do what VCs do best and just dodge the question and say that my prediction is that the moon and Mars will not be colonized by air breathing humans, but rather battery operated or solar operated drones. So I do expect people to go out there, but I think those people are going to be tourists. More so than folks that are, doing science and extracting minerals. I think it's going to be machines doing all that work.
So there's a lot of, I was just doing a quick glance at the attendee list. There's quite a number of startup founders on this list. If any of those founders wanted to reach you guys, what's the best way to do so?
Anton at fundraising.com.
By emails, mv@a16z.com. That's what we're doing, giving out emails.
Anton, Shaheen, I think you guys talked over yourself or talked over each other.
My email is SF, my initials, @lux.vc.
And I'm first name at Prime Movers Lab, Anton.
Great. A huge thank you to the panelists. Thank you guys so much for joining us today. I know we covered a lot and we bounced around quite a bit. There's a lot of topics to cover and there was a lot of requests that we got. So thank you for dealing with that. Thank you to Bank of America, our sponsor. And thank you to all the attendees for joining us today. It was a pleasure. and excited to do this again sometime soon. So have a great day, everyone.
Thank you, Mo, for being a great host.
Thank you.